Well, we feel international markets are an effective tool for Canadian investors to diversify beyond what is a very highly concentrated market here in Canada. As far as where we are with EQ and V, we believe that the E and the Q are still attractive right now. However, the V is looking less compelling as valuations have re-rated. And as far as ideas in international markets, lately we've been finding more in Asia because growth concerns in China have created investment opportunities. We are bottom-up stock pickers, so we try to shy away from making macro predictions. That being said, global valuations have re-rated back to historical norms, and therefore we think the upside is becoming more limited. There's also the concern that profit margins in the US are at historical highs, whereas at least in Europe they're much below historical levels. So we think going forward that should benefit Europe and therefore also help our international growth strategy. We're cautious on Russia and believe many of the economic sanctions put on the country will make it difficult for companies to show any sort of earnings growth over the next year or two. We did, however, take advantage of the sell-off in Russian equities and in other emerging markets to add to some of our holdings there. Longer term, we remain wary of Russia simply because there's poor corporate governance, and we don't believe that shareholders in the long run will benefit from rising cash flows. Well, currencies have been very volatile since the middle of last year because of concerns that the U.S. is going to implement their QE tapering, which has been occurring. Lately, however, emerging market currencies have calmed somewhat. However, we think with tapering continuing through the balance of the year that there will be some volatility to deal with. As far as the Canadian dollar, we think it is generally trading at fair value here. On hedging, we have historically never hedged our global currencies because we feel it's just very difficult to consistently get it right. We're better at stock picking, so that's what we stick to. Well, in the International Growth Fund, in Q1, we initiated in Kasikorn Bank, a bank out of Thailand that had seen the stock price derate because of what's going on in emerging markets. And so we took the opportunity to be able to buy a high-quality bank that has a 20% ROE, focused on the small and medium-sized business lending, very well capitalized. And more importantly, on valuation, it was trading at a trailing 1.8 times book value, and we felt the downside risk was about 1.5 times book. Reason being, only twice since 1993 had Kasikorn Bank ever traded at that valuation, so we felt it was a very good entry. As a sell example, I would give Swedbank, the bank out of Sweden, as one. It had been a very strong performer for us. The reason why we sell was really three reasons. Firstly, we felt that very strict regulatory rules were going to keep the company from continuing to raise the dividend or doing share buybacks. We also saw signs that the net interest income growth was going to slow because they largely repriced their loan book. And thirdly, on valuation, we initiated at 1.25 times book value and ended up selling around 1.7 times with a bank that was showing gradual improvement with ROE, so we felt the valuation had peaked. Our foreign exposure in the Invesco Canadian Premier Fund is approximately 38%. Of that weight, about 27% is in Europe, 8% in the US, and the rest in Asia, Latin America. The reason why we have a high foreign weight in the fund is because we're finding many opportunities outside of Canada, which is still a highly concentrated market and dependent to some extent on growth in China, which has been slowing. As far as future weights, while it's difficult to predict because we do take a bottom-up approach to investing, we would expect the U.S. weight to gradually increase from the 8% level, largely because we brought in Ryan Ammerman, our U.S. portfolio manager, who we worked with for many years. However, he's now moved into our office in Austin, Texas, implementing the EQV style of investing, and therefore, with him generating already good new ideas for the portfolio, that weight should increase.